If you're like me and are tired of these YouTubers letting you know what's already happened in the market, then you've come to the right place, because today we're going to be looking at where things are headed into the end of the year and taking a deep dive on one hot stock in particular to see if the market is missing a potential comeback. For those of you who are new, I use a top-down price action focus and do my best to figure out setups across different markets and discuss how to play them. So we'll start by looking at the big picture of a weekly chart of SPX, which had another very strong close to Q3, up approximately 12% on the quarter, and an additional 10% from the prior swing high before the April tariff sell-off. And looking at this recent move, the bears have done almost nothing to slow this party down, with the last two consecutive bear closes taking place all the way back in June, and even those were nowhere near big enough to scare bulls out of this rally. So let's get grounded by having a look at the next 12 months EPS versus the S&P 500, which we can clearly see has been in a nice uptrend recently, both in terms of price action as well as actual earnings per share being uplifted by the idea that the AI tech revolution is going to keep this market going long term. And you don't have to take my word for it. In both 2018 and in 2022, there have been periods of contraction, but the important message here is it looks nowhere near what it does today. And of course, we can't talk about earnings without also talking about valuation. Sticking with the S&P here, the forward next 12-month price to earning ratio is definitely heating up. We're well above the 5-year average, and we're basically at the same level at 23 times, which was the pandemic high. So let's break down the price to earnings ratio even further across the index to get a better understanding of where this valuation might be coming from, which to no one's surprise has been all tech stocks this year. So we can all agree that valuations are definitely heating up, but if we take out infotech, consumer discretionary, and industrials, the rest of the market is still trading at or below 20 times earnings. And moving on to everybody's favorite topic, talking about Fed rate cuts, we finally got one at the September meeting a couple weeks ago. And looking out to October and December, it looks like that we potentially might get two more by the end of the year. The probabilities for the next October meeting have just shot straight up. And understanding there's a good chance things will probably settle out around the 3 to 3.5% range. So everything's looking relatively well for the S&P going into the end of the year. And having a look at some of the most actively traded stocks in the US, it's no surprise, sticking with the AI theme, that Tesla, NVDA, Palantir, and Apple have all done incredibly well on a 3-month basis. And as I continue to scroll down the list here, one stock that we'll be taking a look at today has definitely not seen the benefits of AI, and that stock is Adobe. They released earnings a couple weeks ago, but the stock is still down 8% on the quarter, and it gets even worse looking at year-to-date and the one-year performance. So let's take a deep dive into Adobe and figure out if this thing is completely cooked or if investors are not pricing in a potential turnaround. The whole point of this channel and what we're looking at today is figuring out, one, if there's any potential setups, and then two, how do we play those and obviously make money off of it. And I think a lot of people look at this chart and believe just because it's sold off, that means it's cheap and it has to bounce, because what they remember is this absolute bananas chart right here that just went straight up ever since the 1980s. But in reality, as we came out of the pandemic, Adobe significantly sold off due to the introduction of ChatGPT and every other large language model under the sun you can think of that generates free content. And a lot of people got worried for good reason, as why would I pay Adobe to generate content or use their tools when I could just go on the internet and generate that for free? There was a lot of built up supply due to the prior move, where people who scaled in too high were eager to get out. And as we're all familiar, that leads us to today, where this thing has just done nothing but sell off, seemingly no sign of improvement yet. As you see at the bottom of the screen there, I have this trend line going from 2019 that is being tested. In fact, there is a lot of good reason technically to be bullish on this stock as we continue to see more patterns forming, such as this wedge right here. But my biggest concern, aside from the fact that they are late to the AI party, is that they failed miserably 4 times in a row to get anywhere above the 20 exponential moving average that I have there in blue. And personally, that's why I haven't played this yet, is because I do see some buying pressure accumulating here above a trend line, and it's a couple pushes down. But where are the bulls? The areas I just highlighted is exactly what you want to see, where Adobe is not only able to get above moving averages, but they just completely run over bears that are in their way with all these consecutive bull bars. And look, I'm not saying Adobe isn't a great investment long term. I mean, look at this thing. It's just completely ripped ever since it IPO'd. But what I'm here to focus on is the fact that I can't move the markets no matter how hard I pray or believe in something. And that's what we're looking at right now, where Adobe just really hasn't made a turnaround. That's why I find this also interesting, because Adobe is completely established, as you can see from the slide here. They work with all these major companies. Everybody knows somebody has Adobe Acrobat installed on their computer. Let's talk about their most recent earnings. I mean, there's a lot to like here. You have a raise to not only revenue, but also EPS on the full year. And you have management claiming they're the leader in AI creative applications. So clearly, they're not just going to let this company get run into the ground and lose market share. They're very well established. We've all used at least one of these applications before. And right now, they're trying to fight back by turbocharging everything that we know with AI solutions. And unfortunately, that might be the problem, because they are checking the box of, yes, we have AI too, but nobody is saying that they struck gold with only a 250 million recurring revenue. But so far, I don't think this is enough to move the needle. And like I said, you don't even have to take my word for it. The market has already made that decision for us. So let's go back and unpack what they're actually raising. I went back to the end of 2024 and pulled their original targets to compare that to what management just put out in their most recent earnings. Sticking with top line revenue and non-GAAP EPS, the range was only raised 2% on the low end and 1% on the high end. In the same low digit growth, it's true for non-GAAP EPS, 3% on the low range and only 2% on the high end. Of course, as we talked about earlier, when earnings go up, share prices generally follow. But I let the market do the work for me, and as we can tell, this is just not enough. I'm certainly not betting against Adobe, and I do hope they actually figure out their strategy, because a lot of the products could be really useful. But it is kind of funny to point out, when executives get very confident in their projections, it always makes you wonder why they don't put their money where their mouth is and just start buying shares out of their own pocket. And before you go rushing in the comments to correct me, I already know they get paid in stock as part of their compensation, but come on, they're not even buying at all. So, all right, they could come out next quarter and, I don't know, maybe raise by 5%, 10%. Would that be enough to turn this around? What if we look out a couple of years? Judging by the most recent estimates I had available, this all looks really good. The only thing I see is green on this chart. And these estimates are good because it's actually pricing in sales growth, and it doesn't mean that they're just putting all their cash into buying back shares to boost their EPS number. In fact, here's another absolutely insane chart looking back all the way to 2016, where, at least to the data I have available, there's only one period where they even missed a earnings estimate. And so let's actually talk about something positive and a good reason why I'm still keeping my eyes open on Adobe. If we look on the right hand of this chart, the blue line is the next 12-month EPS estimate that's continuously rolling. So as this line goes up, as we discussed earlier with S&P, the stock should go with it. Even though the AI strategy they have has not hit escape velocity yet, it does imply that their core business is certainly growing. A lot of people have Adobe on their watch list because in the top chart here, you have their trailing 12 months EPS, which is up only. And on the bottom is their share count, which has only gone down. So almost everybody pulls up this chart and they say, look how cheap the price to earnings ratio is. This is in a complete downtrend and the stock is due to bounce given all the factors we just went over. But as I zoom out here, it's not even the cheapest it's ever been. In fact, the last couple of times it bottomed, Adobe was only trading at 12 times earnings. But wait, I definitely didn't look at next 12 months earnings, right? Because that's how the stock is going to move with all the AI play. But does this tell me anything different than what we just looked at? Once again, this thing bottomed close to like 10 times earnings and it's trading at 15. So I'm not sure if anybody's really even touching this. But even if we look at a next 12 months basis, it's the same story. I'm not suggesting this thing's going to trade back down to 12 or even 10 times earnings, but I got to see more signs of life before I'm willing to put on a long. And we can't talk about stocks unless we're talking about relative valuation and competitors here. And this just kind of reminds me of when you watch sports and your favorite team is losing because Adobe is just so cheap right now. We can focus on the last 5 years compound growth rate of top line revenue and EPS, and just spend a little time reading this table, which honestly, I didn't even need to highlight because there's pretty much numbers all over this thing showing that there's companies out there compounding at faster growth rates than Adobe. But the ones I did draw attention to are AppLovin, CRM, and Microsoft, which I think kind of fall into the same category of integrating software and AI going into the future. More specifically on the Salesforce side, which a lot of people like to draw comparisons to, and I see why. Even though a couple percent might not seem like much, over a 5-year time period, that's definitely a lot about performance. Which on the left-hand side there, you can see they're trading almost 15 turns higher. And I certainly get the argument. These software stocks have been nothing but beat up, being completely left behind by the AI story, even if they're doing their absolute best to integrate across their platforms. I certainly can't move the market, but as you can see, these guys can't either because they're not even able to perform the NASDAQ index over a 5-year time period. So until something materially changes or Adobe just starts blowing not only me, but everybody else out of the water, I think the best case scenario here is you're just trying to target an all-time high, but you have to ask yourself, is it just better for me to buy the overall market because that thing is not slowing down one bit? If we go back to the most recent estimates, we're potentially about to see 3 years of over 12% growth, leading to $26 a share. And if we're being super generous and we take an average of around 35 times PE looking at Microsoft or CRM, which to be fair, Adobe has traded at and above before, that more or less implies a $900 share price for Adobe. And that's where I do actually see opportunity for a setup if they're able to get above these technical factors. Sticking with that implied price target we just looked at, comparing that to the highest price target on Wall Street right now for Adobe, which is $635 a share, where we can do all the fundamental research we want. We can continue to monitor estimates, and we can continue to listen into Adobe's earnings calls. But until they hit escape velocity with their strategy, or they just buy back every single one of their shares in a quarter, I think there just needs to be a bigger catalyst going forward for Adobe to really hit these big price targets, or at least even meet back to the all-time high. We're going to go back over everything we discussed, starting with the bulls, given the fact that Adobe is technically quite cheap. They do have positive earnings growth. Management is confident enough to raise their guidance, and they're obviously confident in their AI strategy. And the bears, on the other hand, believe that software in general is going to be completely cooked by AI. Second point being, not only is AI moving too quick, but they're moving too fast. And the fact that they're scaling quick, and once revenue starts kicking in for these companies, it's just going to be even harder for someone like Adobe. They also believe that there's probably doing too little too late on Adobe's side, where, yeah, it's nice that they're rolling out AI products, but I don't think it's going to be enough to fend off attacks. And the last point I like to leave in terms of how are we going to play this thing and make money off of it, it's really not a good performer versus the overall market. And it does make you wonder if this thing's going to hit an all-time high anytime soon, or is my money better off just sitting in the NASDAQ index? So that's where I'm going to end this video and give it it's probably not quite ready for takeoff out of 10. That's just my opinion. I'd love to hear yours in the comments. I had a lot of fun making this video, and I plan to make more in the future. So let me know what you guys like to see, and let's get out there and make some money.